Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back through daily crypto news and analysis, and today we are going to be talking about the downfall of the legacy systems to implement into the digital age of finance. So sit back, relax, and before we fully jump on into this video, I do just want you guys to hit that like button. Every single time that you hit that like button, a new millionaire is minted every second, and the next one could be you. But in all honesty, it just helps the channel grow immensely, and of course I always do greatly appreciate it. Now, with all of that in mind, I am recording this video a little bit ahead of time, but today we are going to be talking about a lot of the ISO 222 tokens, more so centering this around XRP, XLM, XDC, and QNT. Now, we know that QNT is not an official ISO 222 token, but we already know that it most likely will be fully compliant, as it has been building out, standards within TC 307 and things like that. So let's just dive in and let's talk about a few things first. Let's talk about the downfall of the current age of finance. So overall, we do see here the U.S. economy shrank in the first quarter. Dear Federal Reserve, good luck. Things are happening at a very massive rate right now within the economy. I have been saying it time and time again. When we look at things happening around the U.S. economy, the foundation is cracking and it's going to truly crumble. And when that happens, things are going to get rough. But I will say this. I do believe that they are preparing for the shift, and the shift is towards a digital age. Now, I've always discussed this. We're going to be talking about this here shortly. I know that, everyone right now in the comments is about to say, dude, CBDCs are so bad. We need to go against them. They are not the future, blah, blah, blah. We're going to talk about that. So first off, we also do see here, oops, our bad. The IMF director finally admits that we printed too much money. Pretty, interesting. When we talk about, printing too much money, what is too much money? Is it 80% of the US dollar in circulation in the last 2 years? I don't know if that's too much, right? Only 80% of the US dollar? Come on. But seriously, we've known that this is a big concern. And honestly, we've known that they have printed far too much money. And they continue to print more money. It's absolutely insane. Now, as this is happening, right, we are seeing banks warning that they must speed up their recovery from outages which disrupt service for customers to avoid undermining public confidence in the financial sector, setting the stage for a central bank digital currency. The Bank of England has been rolling out new requirements on so-called operational resilience, which required banks to spell out by the end of the last month how quickly they could recover from an outage. Pretty interesting here. Now, you might be questioning yourselves and you might be wondering, Nick, why the heck does this even matter? What is the correlation here? Well, first off, let's talk about how bad these outages actually are. So we do see here, this has been highlighted by a variety of operational outages still occurring frequently, such as payment outages, app and website failures, and incidents at third-party providers. But the range of impact tolerances, or the amount of time which banks say they would need to recover from an outage, seems surprisingly wide. Therefore, as we go against or about our supervisory review, in the coming year, our teams will be pushing firms to justify the requirements, and we will undertake more detailed, comparisons across peer groups. Now, the funny thing about this, so let's actually talk about where, Ripple, for an example, comes into play. So Ripple just recently talked about CBDCs. This goes back to April 21st. Yesterday, we highlighted the real-world impacts of CBDCs, but to achieve those impacts, central banks need real-world solutions to some practical problems. And again, this is a major problem. Think about it like this. Customers need their money on time at certain times. Think about how big of a disruption it would be if your bank went down and it was down for a day, 2 days, 3 days, a week. That is huge. So when we look at the key areas to address here, it includes identity, offline access, and security. Pretty interesting. Offline access and security are the two ones that I'm focused on, because in terms of offline access, that would allow, again, for these banks to, even if they went out, to continue to function properly. Security is also a huge issue. Think about it. When we talk about hacking, we talk even about major, cyber attacks. Security is a big thing to focus on because it could actually help, alleviate the pain points of not only hacking but also even cyber attacks. This is very key, and I do believe that Ripple is really focused on these because it is solving major issues. So when we talk about a CBDC, why wouldn't it be minted on something like the XRP ledger, aka a DLT that could have a private ledger basis on it to mint either a stablecoin or a CBDC for these central banks? Now, when we talk about CBDCs, we do see here from Quant, even the mighty Federal Reserve is now looking at retail CBDCs, says Gillian Tett. I think the cross-border CBDC might well be the most important use case for the whole world. And yes, cross-border use cases are huge, and I do believe that, again, when we talk about Ripple, it will underpin the efficiencies that Ripple can offer for these CBDCs, again, in terms of the cross-border sector. $156 trillion. It is no joke, guys. And that figure is actually increasing year over year. And we also see down here, central banks have always had a role in creating money for the public, but most money is created by private financial institutions. We've been looking at CBDCs for a number of years. Privacy is one of the features people like most about banknotes. And again, we talk about identity and things like that. Privacy will still be involved in CBDCs. Now, when we talk about CBDCs, again, I'm going back to when I said, Nick, why would we want to support CBDCs? It's not for the people. Guys, I don't support retail CBDCs. In fact, I don't even want a retail CBDC. I want wholesale CBDCs where it's only centered around central banks. Only central banks will be utilizing these digital currencies, not us. But of course, they are talking about, for the public, which I don't like. But hey, we are not going to stop this. They are going to, bring in retail CBDCs whether we like it or not. We have no role within that. But we do see here. So how do you design something that has the privacy people want that isn't open to large-scale abuse? We're grappling with these questions and how it would work in practice. It would be on a private ledger. And in fact, we're going to get to that point. But we do see here, cash is an important part of national sovereignty. So this moment in time is an important one. I applaud the central banks for doing the work now. The G7 principles are also essential. It's not just about a single country with a single central bank. There are many issues around a retail CBDC today. It's going to be a slow process. The technologies need the requirements defined. It has to be a policy driven. They are talking about retail CBDCs. CBDCs are here. What we're seeing is a practical policy-led view of them. Every jurisdiction has different requirements. We're implementing the CBDC in Latin America for 12 countries. Having digital assets really enables trade. Guys, trade finance, things like that are huge. And guys, when we look at this specifically, a CBDC in Latin America for 12 countries from Quant. Also, we do see before cards, we used to carry cash and traveler's checks. With CBDCs, we're going to see a similarly dramatic improvement of money. The technology we've implemented with LAC Chain in Latin America provides seamless integration with back-end banking flows. Again, this is that connection between the legacy system and the digital system. As Gilbert Verdian stressed, there are important regulatory issues here. That's an important program of work internationally. If properly, again, regulated, stablecoins can have a place. Privacy is a key issue. In a digital world, you never want just one answer. A single point of failure, says Hogg. The level of consumer innovation is extraordinary. We should encourage that, but remember that moving money is about a lot more than that. We just hear the approach that Quant and Gilbert Verdian have taken is the right way, an international standard both in technical and value terms. The protocols being developed mean your money can roam with you anywhere in the world, just like your mobile phone does. That requires global collaboration. This is a global disruption of the future of finance. What central banks are bringing to the table is trust. If we can bring that to the digital world, it could provide some benefits. We need interoperability and common standards. Interoperability is all centered around Quant. It's massive. And then we talk about DLTs. Now, DLTs are XDC, XLM, XRP. This is going to be huge. We could see more programmability in crypto and stablecoins to be used for personal banking, and this is through DLTs. DLT's role in personalized banking is going to be huge. I don't see banking with personalization enabled for crypto and blockchain becoming some sort of dystopian Black Mirror. Banks can bring an element of trust in the world where digital assets are comprised or compromised, and tokens get stolen. And we do see here, I don't really see a difference in regard to embracing blockchain between US and EU banks. Rather, an institution is open minded and growth minded, or it isn't. And we do see here on hyper personalization use cases, you could use zero knowledge proof to prove you aren't in sanctioned country. Now, when we talk about all of this, right, there's obviously a few concerns around it. You're talking about security, transparency, interoperability. All of this is huge because think about it like this. Everyone's always trying to, choose the next layer one winner. All of these major assets are going to conjoin together and build out a very strong overall network. And it's being built right now. For an example, Ripple's already integrated into the Overledger network for interoperability for a lot of these banks. Again, Ripple will play a pivotal role here, and so will Quant, but so will all of these other assets. All of these major networks have their have their own major use case. And talking about this, we actually seen an announcement. So shout out to Roll XRP for this, but the 2022 cross-border payments 100 got released. The world's 100 top cross-border payment companies in 2022, according to FXC Intelligence PDF. And here we have it. So the 2022 cross-border payments 100 FXC Intelligence, we do see crypto and DLT. Circle, Ripple, and Stellar are mentioned all here. We do see a ton of public companies, non-banks, and then we also see VC-backed, independently owned, banks as well, private equity-backed as well, and then mobile. The funny thing about all these banks, look at all these major banks moving in to the cross-border payment scene. This is the market that Ripple and Stellar are both disrupting. Ripple's most likely at the forefront of this, as they have been building up some very strong already connections within this area. But we also do see down here. So here we have Circle, Ripple, and Stellar. Again, labeled here for cross-border payments. We do see Circle. You guys can see where Circle is positioned, and then we do see Ripple. Ripple provides a blockchain-based digital payment network and issues the cryptocurrency XRP. The company is expanding quickly with 500 employees across 9 global offices. Its products, are used by customers across more than 55 countries already. And then you do see Stellar. They are also mentioning around MoneyGram here, but Stellar is a decentralized network for sending digital representations of money to accounts around the world. It is being developed by the Stellar Development Foundation, founded in 2014, with the aim of creating a stable financial network that exists outside global economies. In October 2021, this is that MoneyGram partnership announced it was partnering with Stellar Development Foundation to enable international payments through its platform with Stellar and Circle's USDC before launching a pilot cash-in, cash-out program in November. Guys, things are moving rapidly within this area, specifically around a lot of institutional grade clients, but also around massive amounts of markets that are grasping hundreds of trillions of dollars. $156 trillion market for cross-border payments, $27 trillion market for those nostril accounts that Ripple is targeting with XRP's on-demand liquidity. Guys, the amount of money that is being unlocked right now by a lot of these tokens is absolutely insane. And last but not least, I do want to talk to you guys about XDC. So XDC, the second and third debates regarding the bill promoting the use of XDC and other select digital assets, including but not limited to Bitcoin, XRP, Ethereum, and ALGO, as mediums of payment in the nation of Panama, have both passed unanimously in favor of enactment, 68 votes to 0. The bill is now in the hands of President Cortizo for signature upon signature. The law will regulate the commercialization and use of crypto assets in Panama in order to improve access to an excellent instrument that improves the quality of life of Panamanian citizens. Guys, this is absolutely insane. Things are moving forward and fast in terms of regulations. And not only that, but XDC is targeting some very, very strong use cases. In fact, Panama knows about the trade finance standard. XDC here to reduce the $6 trillion trade finance gap. Yeah, the $6 trillion trade finance gap is actually a $19 trillion trade finance gap. And we do see here Panama approves regulatory law allowing for crypto tax payments. And we do see XDC labeled down here next to a few other ones, even IOTA and Algorand. It's funny that it's a lot of ISO 222 tokens as well. So again, Utility is being noticed. Regulations are being ushered in. The change of the overall financial system is here. Guys, pay attention. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.